The internet's improved most areas of our lives and created the most value that we've ever seen. But today, blockchain technology is disrupting or changing everything, and it's going to create many times more wealth and value than we've ever seen. In this video, I'm going to show you one of the biggest areas of disruption that we'll ever see, and I'm going to tell you the areas that you should be watching right now, paying attention to right now to make the most money. So stay tuned. Welcome back, market disruptors. Today, I got something big. We are going to talk about the biggest thing going on in the blockchain and cryptocurrency space today. Now, on Thursdays, we talk about investing. We talk about investing in cryptocurrencies. I do believe they give us the biggest risk versus reward ratio of any other asset that we can invest into. So that's why I like to talk about it. On Tuesdays, I like to talk about before you invest, right? We talked about last week about making more money so you can save more money, so you can invest more. But today we're gonna talk about investing. Now, one of the things that gives us the best opportunity for these big returns, for these massive returns, is disruption, market disruption. That's the name of the channel, Market Disruptors. Now, market disruption is something that I really like. It's kind of comes along with the name that I also like. It's called creative destruction. So when something new is created, it destroys or causes destruction of the old way. All right, and so we've seen that. We've seen the internet, right? It's come along and it's disrupted things like Uber has disrupted the rideshare industry. Airbnb has disrupted the hotel industry. But really, what we've seen is that it's mostly been improvements and not really disruptions. And I'm going to tell you what that means. But right now we're going to get right into it, and we're going to talk about the biggest area in the world, the biggest market that you could ever disrupt, and that's finance. I mean, finance is the money. Finance is where the money is. So we're not just talking about the supply chain industry that's, however many billions of dollars, or just talking about the payment channels. We're talking about the entire finance world. We're talking about hundreds and hundreds of trillions of dollars, thousands of trillions of dollars. And so we're going to talk about that, and really you need to understand it from a high level. So the way that it works today, the financial system works today, is that it is basically controlled. It's centrally controlled. We have the central bank, which central's in the name, right? Central bank that creates and controls the money. Then they give it down to the other banks, and then it makes its way down into the public. Now, the thing with the system that we have today is that it requires trust, all right? Remember these words. It requires trust. I have to trust the bank. I have to trust the central bank not to do anything crazy. I have to trust that they know what they're doing, which they probably don't. I have to trust that they don't overinflate the economy. I have to trust that they don't mess up the interest rates. I have to trust all these things. I have to trust they're not being greedy. I have to trust they're not looking out for their own interests, etc. I have to trust my bank. I have to trust my bank to allow me to pull the money out when I go there. I have to trust my bank not to seize my bank or freeze my bank account. All these things, right? Then I have to have permission. In order to open a bank account, I have to have permission. If you've opened up a bank account, you know how much paperwork that requires. In order to get my money, I have to get permission. If you've tried to go and withdraw $5,000, $10,000 in cash, see how that works. You have to have permission to get the money out. If you want to send a wire transfer, you have to have permission. Last year, I was buying a bunch of mining equipment, and I had to send a few $100,000 over to China. I had to go to the bank and had to do a wire. And I sat down with the banker and I filled out all the paperwork and did everything. And they said, "Ooh, I don't know if we can let you send this." I'm like, "What do you mean?" They're like, "Well, this is a couple $100,000 and you want to send it to China." And I said, "Yeah." And I said, "Well, I don't know if I can do this." So he had to go get his manager. Manager had to come down, sit with me. They had to call in, and they had to get all this approval, permission for me to even send my money, right? So it's permission. It's centralized, as we said, it's centrally controlled. And then of course, because it's centrally controlled, what are they really doing? They're just taking a piece of every single transaction, and so it causes high fees. We call that rent seeking. So there's really high fees. That's the problems today. Now, the internet did improve it. It didn't fundamentally change it. It didn't disrupt it, but it did improve it. So we got what we call fintech, financial technology, and it improved things. It made everything easier, faster, and cheaper. but it didn't change it. So we have Square, we have Stripe. Stripe's a payment processor. It's super easy for me to start accepting credit cards on my website with the click of a button, and I like that. That's great. Robinhood, oh, now I have an app and I can just trade and buy and sell right from my phone. Okay, that's nice. Before the internet, I had to drive down to my broker's office or call them on the phone. That was kind of a pain. So I like that, but it's not allowing me to do anything I couldn't do before. It's just easier, cheaper, and faster. All right, that's what the internet did. Now, what we have today, and this is the disruption, this is where everything changes, all right? And the killer features of crypto are that it's trustless, right? So with the banking system, it's all revolves on trust. We have to trust them, we have to trust everybody. But with crypto, it's trustless. And what that means is that because it's open source, because it's not relying on people, it's relying on math. Math is reliable. 2 + 2 is always 4, all the time, forever and ever. 2 + 2 is always 4. Math is always there. And so we're talking about code, we're talking about math, and we can always trust code, we can always trust math. And because it's open source, we can all view it, we can all see it. And so if somebody were to go in there and change it, everybody would know. So it's trustless. We don't have to trust anybody. It's open source. Everybody knows it. Everybody can verify it. All right. It's also permissionless. So like with the bank, I have to have permission to even open a bank account. I have to have a permission to get my money out of the bank account. I have to have permission to even access my money. But cryptocurrency is permissionless. Anybody can just download a wallet and start transferring money. There's no permission. It's borderless. And this is a big one. Now, I travel a lot, and whenever I go from one country to another, I have to exchange my US dollars for whatever local currency I go to. Every time I cross a border, I have to change that money. But cryptocurrency is borderless. Bitcoin is the same in the United States as Bitcoin in Japan. And Ethereum is the same in Mexico as it is in France, right? It's the same. It's trustless, it's permissionless, it's borderless. That is the disruption. We're going to talk about what that really means. Now, to get a little bit deeper into it, the banking system that we have today, this is kind of a little bit of a diagram of it. So you have the central bank up here at the top. This is sovereign money. They have the sovereign right to create money. So the central bank creates the money, they push it down. I'm not going to get super deep into the monetary policy, but they create the money and they push it down into the commercial banks, the Citis, the Chases, the Wells Fargo, Bank of Americas, etc. And then those commercial banks put the money out to us by way of loans and credit creation and stuff like that, all right? Then the commercial banks send the money down to the investment banks, Goldman Sachs, JP Morgan, etc. And they do IPOs, bonds, securities, they lend securities, rehypothecation, a lot of complex things. I did do a 4-part video series on Wall Street and Bitcoin. I'll put a link to it up above if you want to click on that and check that out. But that's kind of the banking system that we have today. All right, but what the cryptocurrency is going to do is create this DeFi, or decentralized finance, DeFi, decentralized finance, or we call it open finance, right? And so the difference is this is not controlled by a network of banks. It's not constrained by borders. It's global, just like the internet, right? Money flows completely different. Instead of starting at the top and flowing down, it converts different. So like in the other example, we had the central bank going to the commercial bank. Here, the miners are the ones creating the Bitcoin, creating the Ethereum, right? The miners are creating the coins and then pushing it down to a fiat crypto exchange. So at that point, Coinbase, Gemini, Kraken, etc., I can exchange my fiat for the money. So instead of the central bank creating the money, it's created here, non-sovereign money creation. All right, and then it goes down to the exchange. We can also take from the commercial bank, our Wells Fargo, Bank of America, take our fiat and exchange it for that crypto here. Then it goes into this open finance infrastructure. Then it goes into Bitcoin, Ethereum, it goes into my wallet, and I can do whatever I want with it. And it goes a lot deeper. I'm going to get into that. Now, I just want to say, this is a really big subject. It's a deep subject. I try to take these big subjects and make them simple to understand, and I try to keep it relatively short so I don't see your eyes glazing over and everybody doesn't start logging off. So I know it's a little bit simplistic of a view. If I'm going too fast and you'd like me to dig into any more of this, just leave a comment down below on the areas you'd like to hear more about. And if you're like, you know everything and I'm making it way too simple, don't go too hard on me because I'm trying to make it so everybody understands, all right? So give me some thumbs up on it if you like that. You know I'm working hard for you guys out here, so give me a thumbs up. If not, give me a thumbs down, whatever, either way. But this is the shift that I'm talking about right here, okay? Not just an improvement, I'm talking about disruption. I'm talking about changing everything. So the shift here is that we're moving liquidity from analog to digital, analog being physical, being paper, into this digital world where now everything's digital. And in this new digital world, we don't need banks. If you think about it, what do you need a bank for, right? What do you need a bank for? The bank holds your money and the bank gives you loans. You know, you need loans for a car, for a house, your credit card, your business line, whatever it may be, and then they need to hold your money. But in a digital world, if I can hold my own money, why do I need them, right? I guess I still need loans, so we're gonna get to that. But in this digital world, we don't need the banks. We're not constrained by this footprint, this network. I don't need an ATM network. I don't need any of that. So what it does is it breaks this monopoly that the banks have, this monopoly of them taking our money, taking our deposits, and really it fundamentally changes the entire way the banking system works, which I guess if you're a banker isn't such a good thing, which is why you hear the bankers talking out against cryptocurrency all the time. I mean, it is a tiny little speck today compared to the banking system. I mean, it's not even recognizable, but they understand the threat. That's why you see the head of the banks, the head of the central banks, the head of the BIS, the central bank of the central banks, talking out against it because they understand this. Now, today, this is already being built out. This DeFi, decentralized finance, this open finance, it's already being built today. And almost all of this DeFi is being built on the Ethereum network, most of it anyway. Now, Ethereum, for those of you guys who don't know, it's this giant open ledger. It's another cryptocurrency. It's open 24 hours a day, 365 globally, and it's secured by proof of work. Now, today, we have several DeFi open finance applications running on the Ethereum blockchain, and we have 2% of all Ethereum is locked up in contracts, locked up in this open finance. That's about 2.2 million tokens, or almost $400 million worth of open finance, decentralized finance contracts are opened up right now today. So it's already pretty big. It's already pretty massive. Now, the DeFi system kind of works like this. So you get the money from your commercial bank, from your Chase or JP Morgan or whatever, you send it to your Coinbase, and then you turn that fiat, that physical money, into that digital money. And then it goes into your wallet, whether that be MetaMask or whatever wallet that you're using. Then it goes into the decentralized finance applications. And depending on what that is, now, like I said, for most people, you're just getting loans. You're just getting loans for your car, for your house or whatever. And so we have this whole lending section that's already built up. But there's so much more to the world of finance than that. And there's all of that. So we have the derivatives market. We have asset management, right? That's what Wall Street is, right? Most people don't want to manage their own assets. They give those assets to someone else to manage. Obviously, the exchanges where we can exchange those assets for other assets, stable coins, which I think will have a really good use later down the road, and all these different types of things. So basically, the cash gets digitized and it's gone, and we don't need to go back to the bank. All right, now, sounds really good for us, right? Not so good for the banks. Think about that, right? What do we need them for anymore? So who are the beneficiaries of this? Well, the beneficiaries is me. It's you. We're the beneficiaries. It's the consumer. And it's also the builders. It's anyone who wants to build a company for this. It's anybody who wants to write the code. There's anyone who wants to have this disruptive industry, because now there's no barrier to entry. If you want to start a bank, good luck. It's probably not going to work. If you want to go disrupt Visa or MasterCard, it's probably not going to happen. If you want to disrupt Wells Fargo, it's probably not going to happen. But today, anybody can sit there and write code, build a new application, and jump right into this space. And so those are the beneficiaries, because there's no barrier to entry. There's no moat right now. And so that's the big opportunity. Now, like I said, for most of us consumers, really, we need the bank to store our money, which crypto we don't, because we can store it ourselves. And then we need loans. And so the loan market is probably really the first area that we're seeing this massive penetration in this space, and this loan industry. And a real kind of high level view of how that works and why it works so good is that traditionally today, I put my money in the bank. The bank pays me about 1%. Then the bank loans my money out for like 7%. So they're making a 6% spread. Well, like I said at the beginning of the video, the internet improved that. It made it better. So what they did is they said, well, we have this fintech solution and we'll make it a little bit better. So what we'll do is, we'll improve the process a little bit, which means we can carve out 4% for ourselves. Okay, well, that's great. But me, what does that really mean for me? I'm not making any more money. I'm still getting my 1% on my deposit, okay? But with the open finance, the way this market works today is now I can deposit my funds into this open finance system. And as a depositor, instead of getting 1%, I can get 4%. I can get 5%. And then as a borrower, instead of borrowing at 7%, I can borrow at 4%. You see, everybody makes more money. Why? Because you don't have the bank in the middle taking 6%. So that 6% now gets spread to each person. Now only 1% gets taken for all of that. And so not only is it cheaper, it's trustless, it's permissionless, right? All those things that we talked about. I don't need permission to jump into this. If you've tried to get a loan before, there's a lot of paperwork. There's a lot of hoops that you have to jump through. If you want to get a loan on one of these open finance networks, you can get a loan in hours. I can deposit my funds, I can fill out the application where I want my money, and within hours I can be funded, and I'm getting a better rate, all with less risk, trustless, permissionless. Now, I told you at the end, I would tell you the areas that we want to focus on. Now there's a lot of areas, all right? So this is, the world of finance is obviously a really, really big place. One area that I think is pretty cool, I'm gonna go back to this slide for a second, is in this scenario, what's cool about this is, like I said, the lending piece is really the area that's taking off the most. And what's really cool about that is what you can do with it. Now, I'm gonna sidetrack for just a minute. In investing, there's a term called the velocity of money. And what that means is that the velocity, the faster I can get that money to move, the more money I can make. And really, to break it down, it means that I want $1 to do multiple jobs. So let's say, for example, that I have my $1 and I put it into Bitcoin. I have whatever, I'll say I have $20,000. I put $20,000 into Bitcoin. And now that $20,000 is sitting in Bitcoin. And hopefully it goes up in value and it doubles my $20,000 or whatever it does, but that $20,000 is sitting there, all right? Let's say that I put $20,000 onto a piece of real estate and that $20,000 is sitting there, right? They're each doing one job each. But let's say that I could put that $20,000 down into a piece of real estate, the real estate goes up in value. I then take a loan out against that and then take that borrowed money and put that into Bitcoin. Now that same $20,000 is doing two jobs. Or I could put that $20,000 into like an infinite banking concept. And that infinite banking is paying me, let's say, 7-8% interest. I can borrow it back at 4%. So now that $20,000 is still there, giving me a 4% premium. And then I take that money and then I put it into Bitcoin. And now I put it into Bitcoin. And now with this open finance, I can borrow 10,000 back. So I put 20,000 in, I borrow 10,000 back, and now I take that 10,000 and I put that down on a new duplex. So now I have $20,000 doing three jobs, making 4% of my infinite banking. It's making whatever Bitcoin is appreciating over here, and it's making the rents plus equity being built up in that rental property. $1 doing three jobs, velocity of money, and that's what this opens up for us. So it's a really big deal. Now, if you want to know more about velocity of money, leave me a comment down below. Maybe it deserves its own video, or if you want to know more about the infinite banking, it's pretty cool as well. Leave me a comment, I'll get into it more. But this is the players. This is where you want to focus on. Now, like I said, I know there's a lot of things here, but we have like payment networks. So there's some payment networks here. These are some really good opportunities. I try to get in on some of these deals here. Also, we have the custodial services now. Like I said, we use the banks to store our money, but with crypto, we don't really need to. But some people, especially if you have a lot, if you have millions, you may want to have someone else store it for you. And so you have custodial services, you have all these exchanges and liquidity networks. We can buy into all these. These have tokens, Kyber network, Paradex is private. We can buy into Bancor, Ren, we can buy into Loopring, AirSwaps. We can buy all these. These infrastructure plays right here, like 0x is really good, right? Oxcert, these are all ones that we can buy into. KYC and Identity, Civic, all these we can buy into. We want to look at like the issuance, the stable coins, obviously we can buy those, and then the credit and the lending. And so this is going to be a really good area. So, you know, Celsius, Dharma, Maker, and Salt, etc., on and on and on. So these are the areas that you want to focus on. This is going to be the biggest area that I think going to be the biggest area that we're going to see disrupted. The world of finance. I mean, what can be bigger, right? So hopefully that makes sense to you. Like I said, I know it was a deep subject. I'm trying to compress it down. It's something that I've really been studying and putting a lot of time into. As a matter of fact, I'm sitting on a panel just about DeFi Open Finance at a conference here in a couple of weeks. But anyway, if you want to know more about any of this stuff, leave me a comment down below. I love to engage in conversations with you guys on all this stuff. And if you like it, give me some thumbs up. Share the video. That'd be great if you share the video. Subscribe if you're not already subscribed. And if you don't like it, whatever, just put the thumb down. Let me know either way. And that's it. Hopefully you enjoyed it. As I always say, to your success, I'm out.